Unlock your financial potential. Trading can be exciting. Imagine having the power to grow your wealth from the comfort of your home. It's a way to grow your money. By investing wisely, you can see your savings multiply over time. You can buy and sell parts of companies called stocks. This means you own a piece of the business and can benefit from its success. When companies do well, their stock value goes up. This increase in value can lead to significant financial gains for investors. You can make money when this happens. The thrill of seeing your investments grow can be incredibly rewarding. Trading is like a game. It requires strategy, patience, and a keen understanding of market trends. You need to learn the rules to win. Educating yourself about the market is crucial for success. It's important to start slowly. Begin with small investments to minimize risk while you learn. Don't invest money you need right away. Always ensure you have an emergency fund and only use disposable income for trading. Trading can be risky, but it can also be rewarding. Understanding the balance between risk and reward is key. It's a way to take control of your finances. By actively managing your investments, you can work towards financial independence. Learn the basics, start small, and you could be on your way to financial success. With dedication and the right knowledge, the possibilities are endless. Are you ready to start your trading journey? Let's learn more. The world of trading awaits you, full of opportunities and potential. Let's learn some important words. Trading, buying and selling stocks to make money. Stock market, a place where stocks are bought and sold. Candles, charts that show stock price movements. Investment, putting money into something hoping it will grow. Risk, the chance of losing money on an investment. Understanding these terms is key to navigating the stock market. Think of the stock market as a giant auction where the excitement never stops and the stakes are always high. Buyers and sellers come together to trade stocks, each with their own strategies and goals, creating a dynamic and ever-changing environment. When more people want to buy a stock, the price goes up, reflecting the increased demand and optimism about the company's future. Conversely, when more people want to sell, the price goes down, indicating a lack of confidence or a shift in market sentiment. Companies list their stocks on the stock market to raise money, allowing them to fund new projects, expand operations, and grow their business. Investors buy these stocks to potentially profit from the company's growth. It's a win-win situation, as companies get the capital they need, and investors get a chance to share in the success. Remember, investing in the stock market involves risk. Prices can be volatile, and there's always the possibility of losing money. It's essential to research and understand the companies you're interested in. Knowledge is power, and being informed can help you make better investment decisions. Consider seeking advice from financial experts and staying updated with the latest market trends to navigate the financial playground effectively. Section 4. Types of trades, finding your strategy. There are different ways to trade: day trading, which involves buying and selling stocks within the same day; swing trading, where you hold stocks for a few days or weeks; and long-term investing, where you hold stocks for years or even decades. The best strategy really depends on your goals and risk tolerance. Day trading is fast-paced and risky, while long-term investing is more stable. Section 5. Decoding candlesticks, visualizing price action. Candlestick charts are powerful tools for traders. Each candle tells a story about the stock's price movement over a specific time frame. A green candle means the price went up during that period, while a red candle means the price went down during that period. By analyzing candlestick patterns, traders can identify potential buying or selling opportunities. It's like reading the language of the market. Section 6. Risk management, protecting your investments. Trading always involves risk, and understanding how to manage that risk is essential for any investor. It's crucial to manage your risk to protect your investments. Here are some tips to help you navigate the complexities of the stock market and safeguard your financial future. Diversify. Don't put all your eggs in one basket. By spreading your investments across different assets, you reduce the impact of a poor-performing investment on your overall portfolio. Invest in different companies and sectors. This way, if one sector underperforms, others may compensate, balancing your risk. Set stop-loss orders. These automatically sell your stock if it drops to a certain price, limiting your losses. This strategy helps you avoid significant financial setbacks. Start small. Don't invest more than you can afford to lose. Begin with smaller amounts to test the waters and gradually increase your investments as you gain confidence and experience. Remember, trading is a marathon, not a sprint. Patience and long-term planning are key to weathering market fluctuations and achieving sustained growth. By managing your risk and making informed decisions, you can increase your chances of success in the stock market. Stay informed, stay patient, and always be prepared to adapt your strategies as needed. That's it for now. Keep learning about trading. There's so much more to discover. Remember to start slow, manage your risk, and never stop learning.